My name is Saurabh Paliwal from the Biocon Investor Relations team, and I welcome you to the second quarter and half-year fiscal year 21 earnings conference call. Before we proceed with the call, I would like to remind everyone that a replay of today's discussion will be available for the next few days, about 60 minutes post the conclusion of the conference call. The transcript shall be made available on the website in due course. To discuss this quarter's business performance and future outlook, we have the senior leadership at Biocon, comprising Dr. Kiran Mazumdar-Shaw, our chairperson, and other colleagues from the management team. I would also take this opportunity to remind everyone of the safe harbor related to this conference call. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risks that our business faces that could cause our future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. At the end of this call, if you need any further information or clarifications, please do get in touch with us. With this, I would like to hand over the call to Dr. Kiran Mazumdar. Over to you, Kiran.
Thank you, Saurabh, and good morning, everyone. I welcome you to Biocon's earnings call for the second quarter of the half year of FY21. Let me start by wishing everyone Shubha Navratri and a very happy Diwali ahead of time. As you know, we are all anxiously awaiting the vaccine, and I do hope that you and your families are keeping safe. Let me start today's earnings call with some key management updates. As you know, Siddharth Mittal, who used to be the CFO of Biocon, was elevated to the post of MD and CEO. And I am now pleased to welcome Mr. Anupam Jindal as the new Chief Financial Officer at Biocon Limited. Anupam will head the finance function at Biocon and be part of the executive leadership team reporting to Siddharth Mittal. Anupam joins us from the Vedanta group of companies where he worked for 22 years and held the position of Group Chief Financial Officer at Sterlite Technologies since 2006. I'm also pleased to announce the appointment of a Group Chief Information Officer, Atanu Roy, who joins us with a vast experience in the pharma and tech sectors with Sun Pharma, Dr. Reddy's and HP. Now coming to highlights for the quarter, Tata Capital Growth Fund invested $30 million or 225 crores in Biocon Biologics for a minority 0.85% stake, valuing it at an equity valuation of $3.5 billion. Semglee, co-developed by Biocon Biologics and Mylan, has been commercialized in the US. It is the third product launch in the US market under the joint collaboration after the successful commercialization of Fulphila, which is pegfilgrastim, and Ogivri, which is trastuzumab in 2018 and 2019 respectively. Our partner Mylan also launched biosimilar etanercept in Europe, in which Biocon Biologics has an economic interest. Equillium, our US partner for our drug itolizumab, recently received positive feedback from their pre-IND meeting with the US FDA and is advancing along the regulatory pathway in preparation for initiating a global phase 3 clinical trial in Q4 of calendar year 2020. We have also initiated phase 4 clinical trials in India following consent from the Drugs Controller General in September 2020 for our drug itolizumab. Syngene commenced manufacturing remdesivir in Bangalore as a part of its voluntary license agreement with Gilead, and as you just heard the news this morning, US FDA has given a final approval to remdesivir as an antiviral drug for COVID-19. Moving on, I will now present the key financial highlights for Q2FY21. This quarter, we delivered a year-on-year revenue growth of 10%, wherein total revenues increased from 1,606 crores last fiscal to 1,760 crores in Q2FY21. Revenue from operations stood at 1,745, up 11% by stable performance in generics, which was up 8%, biosimilars, which was up 11%, and a return to growth in research services, which was up 12% year-on-year. We recorded gross R&D spends of 165 crores this quarter, which corresponds to a 13% of revenue ex-Syngene. Of this, 148 crores is reported in the P&L, while the balance amount has been capitalized. The increase in R&D expenses is primarily due to higher spends to develop our biosimilars pipeline. During the year, we booked a forex loss of 18 crores compared to a gain of 16 crores last year. This amount is reflected in the other expenses line of the P&L statement. EBITDA for the quarter was 407 crores, which was down 8% from last year. EBITDA margins, however, stood at 23% against 27% reported in the same period last year. The reduction in the EBITDA margin this quarter is a result of higher R&D spends, higher staff costs, forex loss, and other expenses. When it comes to core margins, in terms of EBITDA margin, net of licensing, impact of forex and R&D, this stood at a healthy 32% compared to 33% last year. Lower EBITDA coupled with higher depreciation and amortization costs results in PBT before exceptional item being down to 223 crores. Net profit for the quarter was 169 crores. Adjusting for impact from discontinuing operations, net profit stood at 174 crores with net profit margin at 10%. Now coming to reviewing business segments performance for this quarter. The generic segment reported 8% growth over last year with revenues at 599 crores, primarily driven by the generic formulations business. Segment PBT margins for the quarter stood at 12%, down 6% over last year due to increase in staff costs, higher R&D and forex loss. API business growth was largely driven by the immunosuppressants portfolio supported by sales of specialty APIs. The generic formulations business reported strong growth with our products maintaining mid to high teens market share in the US. There was no significant impact of COVID on supply or demand of products in the generic segment. Looking forward, we expect generic formulations to continue to drive growth for the generic segment based on new launches in the US for the products that are currently under regulatory review. We have also received licenses from MHRA UK to import and distribute products in the UK. This is in line with our plans to commercialize our formulations directly in the UK. Novel molecules, as I mentioned earlier, our partner Equillium is making rapid progress in taking itolizumab global. Apart from advancing along the US regulatory pathway in preparation for initiating a phase 3 study for COVID-19, Equillium continues to make good progress on earlier initiated studies with itolizumab. In the EQUATE phase 1B study, I am pleased to share with you that complete response to the drug has been observed in a large number of patients by day 29 in the first two cohorts, and Equillium has proceeded with dose escalation in the third cohort as planned. Additionally, Equillium continues to advance their 1B EQUIP and EQUALIZE studies in uncontrolled asthma and lupus nephritis respectively. In terms of research services, Syngene reported 12% year-on-year growth with revenues of 520 crores in Q2 with good performance in the discovery services and dedicated R&D centers. After the impact due to COVID-19 operations in Q1, Syngene has restored their business to near normalcy. Coming to biosimilars, I now hand this over to my colleague Dr. Christian Hammercher, MD and CEO of Biocon Biologics, to discuss the performance.
Thank you, Kiran, and good morning, everyone. For Biocon Biologics, let me dive straight into the factors that influence our performance in Q2. After a strong recovery in Q1, we have recorded a modest 11% top-line growth versus Q2 last year and a 2% decline versus Q1. While in Q2, we continue to see increased demand for our products, we have not been able to fully capitalize on the opportunity on account of some operational challenges, which have been further amplified by COVID-19. This has resulted in some supply constraints, thereby impacting our top line. We are working to mitigate this and be back to maximum operations in the coming quarters. Moreover, on the back of COVID-19, there have also been some challenges in the already stressed healthcare system, impacting regular patient flow, particularly in critical care segments such as oncology. Moving on to profitability. In Q2 fiscal year 21, Biocon Biologics had an EBITDA margin of 27%, versus 30% last year, and PBT of 81 crores versus 107 crore last year. The reduction was primarily on the account of the operational challenges leading to lower than expected sales, forex losses, and higher R&D costs. Our R&D cost for last quarter was 82 crores versus 46 crore last year due to investments in our strong pipeline. We have seen growth in revenues from developed markets, including the US. Ogilvy, our biosimilar trastuzumab, shows a 6% market share with 4% in the 150 milligram segment and 10% in the 420 milligram segment. In Australia and Canada, we continue to be the leading biosimilar for trastuzumab, and in Europe, Ogilvy has double-digit share in 3 markets. Fulphila, our biosimilar pegfilgrastim, held 15% of the U.S. prefilled syringe market in Q2 fiscal year 21. Semglee, our biosimilar glargine in the U.S., has slowly started gaining market share. We are confident that Semglee will have a long revenue stream addressing a business opportunity of $2.1 billion with limited competition. In Europe, we are seeing encouraging market penetration for Semglee in certain parts, such as Slovakia and Croatia. Semglee has also been launched in Spain in Q2, which is the 3rd largest market in Europe by value. Our partner has also launched etanercept in Europe, where we have economic interest. Moving on to most of the world markets, where we see a good demand for biosimilars. In Q2 fiscal year 21, we launched biosimilar trastuzumab in Argentina. As a result, we also have started strengthening our commercial infrastructure by building up direct presence in selected countries like Brazil, Malaysia, UAE, and Saudi Arabia, which should allow us to further improve our most of the world business, both from a revenue and profitability perspective. Branded formulation business in India recorded a sequential growth of 13% versus Q1. As a part of our initiative to make recombinant human insulin available for less than 10 cents in low and middle income countries, we signed 2 memorandums of understanding with 2 municipal governments in the Philippines for a long-term integrated diabetes management program. On the regulatory front, the BLA and marketing authorization submission for insulin aspart is under review with the FDA and EMA. Concerning the rest of our pipeline, we continue to make good progress. We are in the process of completing the integration of our recently acquired R&D site in Chennai, which further solidifies our R&D infrastructure. We are also working on ramping up our manufacturing capacity and are also developing a network strategy to further improve our supply chain. The investment in a new antibody manufacturing facility at Bangalore is expected to be ready for commercial operations in fiscal year 23. Additionally, we expect to commission a 3rd monoclonal antibody facility, which should be operational in fiscal year 24. We also continue to invest in improving our productivity and efficiency, including digitization and digital transformation efforts. Finally, to conclude, We expect continued improvement in performance in fiscal year 21 with full year revenue from biosimilar trastuzumab in the US and good contribution from ramp-up of the biosimilar glargine in the US. This will be aided by biosimilar pegfilgrastim and biosimilar trastuzumab in several most of the world markets. We continue to be on track to build Biocon Biologics as a leading global pure-play biosimilar company through the exciting platform built over the last 15 years, reaching our $1 billion milestone by the end of fiscal year 2022. With this, I hand over back to Karen.
Thank you, Christian. Let me now come to the outlook. While dealing with challenges posed by the COVID-19 pandemic on our operations across different business segments in the first half of the year, we have delivered a 12% revenue growth on a consolidated basis, which is below par. However, we are confident the coming quarters will see stronger performance. COVID-19 has strained healthcare systems globally. This has brought sharp focus on access and affordability, creating a strong demand for generics and biosimilars. Biocon is in a good position in both these areas, which bodes well for us in the long term. Whilst uncertainties may persist during the rest of the year, we expect the biosimilar segment to continue to lead overall revenue growth for Biocon. With this, I would like to open the floor to question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash from Axis. Please go ahead.
Yeah, hi, good morning. Thank you for the opportunity. Just the first question on actually the biosimilar business. So we have seen, Q and Q flattish performance despite, some market share gains in our PEG and Trastu and the glargine launch. So just trying to understand, would the sales of glargine would have been booked, or we would see the bookings from next quarter, and similar commentary on the EBIT margin, which has been lower. So if you could help us understand. Thank you.
Yes, you're right. This quarter does not reflect the full launch of glargine in the US market. And we believe that you will see the greater impact of glargine in the US market in the coming quarters.
Okay. By that statement, I understand there is some launch impact should be there, right? So still it is flattish. So what is the other things which have actually been muted or declined? If that color would be possible.
Well, as you heard from Christian's comments, I think many of these segments are still constrained by COVID. A lot of the hospital treatments and hospital services are impacted by COVID. So we are not seeing the kind of growth or uptick that we normally would have expected. But I believe that things are improving now. And as you see the hospitals now becoming freer of COVID cases, I think the rest of the disease segments are freeing up and opening up to more patient traffic. And I think that's what is now giving us the signals that that we will see start the resumption of business as usual, and thereby we will start seeing increased traction in all these biosimilars. So whilst on one hand our operations has not been affected by COVID to such an extent, I think our ability to increase market share in these in the developed markets has not had the same good fortune, because I think COVID still has dampened the kind of hospital-based available treatments, and thereby I think that in the coming quarters you are likely to now see an uptick.
Yeah, it's not unusual what we are saying. Many other companies have reported the same, that we are seeing the challenges, as Kiran has alluded to, in particular in critical segments such as oncology. There's a clear interruption in regular patient flow. It is now coming back. There are stressed healthcare resources. What's important for us to see is that the pressure on the healthcare system in terms of cost is massive. The need for biosimilars at this moment from our perspective is very, very high because of all the cost constraints and the cost pressure. So we are expecting, and we actually see traction on our molecules in last weekly updates that are published, that are publicly available for our molecules, Fulphila and trastuzumab biosimilars in the US, who are further gaining the uptake. So we are seeing this now in the last weekly updates that we further get traction.
That is very helpful. Thank you for the answer. And second question is on, what we are seeing now with Glargine having launched, more than a month. So how has been the traction, and when do we see, do we expect, you mentioned you expect a slow traction, but just trying to understand, how do we see the traction in terms of reaching about 10% plus market share? How is the acceptability at the, the channel, if you could give some color?
When it comes to Glargine in the United States, so it's very, very early that we have Glargine in the US market. I think it's important to understand that Semglee, like the other biosimilars in the US, are going for more than $2 billion opportunity in the market alone. There is limited competition so far. And if you now look at the market in the United States and how the biosimilars have ramped up in terms of market share, we are very confident that we will see a steady growth of Semglee in the US, and not only in the US, but also in Europe. I just referenced the launch in Spain. So we expect Semglee to be a key contributor to our success in the United States with our partner Mylan.
Okay, thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Good morning. Thank you for the opportunity. So continue on Semglee, just wanted to understand, when we go for such critical launches, what kind of inventory we keep ready during the market launch? And related to that, since now Semglee is launched in the US and in other markets also, what kind of utilization level has picked up at the Malaysia plant? If you can provide some update here.
So I start on the inventory. Like with each and every launch, when you launch in a key market in the US, there is sufficient inventory to go for a launch to make it successful. That's a basic foundation, and we do that together with Mylan. We are very, very experienced partners to do so.
So any quantitative numbers, say like you go with 6 months, 9 months kind of inventory, or any color on that will be helpful?
We have sufficient inventory for our launch as required. And inventories depends on market, depends on the launch plans, are always between 3 to 6 months.
Thank you. And update on the Malaysia plant utilization?
And so the Malaysia plant utilization.
Yeah. Hi. So just one clarity. Yes, of course, with the launch, we do build up inventory. Today, more inventory is lying at our end, which is not translated to sales. And if you see now segment assets, you'll see that increase, reflecting high inventory at our end. This applies to both our facilities across. So in Q1, when we ramped down production, and then post that we've been ramping up. So now we are back to near normal. But overall, during this period, we have lost some production days. And as such, it has impacted our sales despite this very strong demand for the biosimilars. Malaysia's, as we started ramping up, the profitability is near break-even, and if we take off R&D, it's at break-even. So we're starting to see improved performance from Malaysia, which will improve in the coming quarters, further improve in the coming quarters.
Okay, so in next quarter, we should be seeing profitability break-even for Malaysia plant. As you said, we are almost there.
Yeah, that's right, yes.
Okay, and a broad question, as of second quarter, if you can split your biosimilar sales between developed market and emerging market, that will be helpful.
The split is now roughly a 50-50 split, and what we expect to see that this will move further towards the developed markets over time.
Thank you very much. I'll get back in the queue for further questions.
Thank you. The next question is from the line of Nithya Balasubramaniam from Bernstein Research. Please go ahead.
Yeah, hi. I had a couple of questions on Semglee. So I understand that you've launched it at a 65% discount to the list price of the innovator. We do know that rebates are very high in this space to the extent of 80%. So can you throw some color on what would be the discount that you're offering on the net price and not just the list price?
Thank you for your question. I hope you understand we are not commenting on these specifics for the prices.
If you're not commenting on the specifics, can you throw color on is there a significant discount or a decent discount? Any color on how competitive Biocon's product is in the market?
Certainly very important questions, and that would reveal a lot of business and competitive intelligence, so I can't comment further.
Okay. The other related question was on interchangeability. I think the press release noted that you have a file with the FDA which is under review. So if you can give us some color on will this be treated as a new application or a supplementary application? When do you expect to hear back from the FDA on interchangeability?
This is Sundar. As we have discussed with the agency, we have made the submission to the agency for the requirement, and as you know, for the new guidance, if the analytical similarity package is very strong, then that could be sufficient for both biosimilarity and interchangeability, and that's exactly what we have done. We have made the submission, and we are confident of a successful review and approval. Once we get more clarity on the timelines, we'll be happy to communicate them to you.
Thank you. But to my first question on will this be treated as a new application because you're now submitting it in the 351K pathway, or would this be treated as some sort of a supplementary approval because you already have an approval?
Yeah. So we are not commenting on that at this point in time. So we'll communicate that to you at an appropriate time.
All right. Thank you. I just had one more on R&D expenses. So given that you are continuing to work on newer molecules in your pipeline for the Sandoz partnership as well, will these elevated levels continue, or are you expecting this to move up further in the future?
Hi. This is. You want to go ahead, Shini?
Yeah, Gopal, I'll try that. Nithya, hi. As an absolute number, we've seen R&D cost increase, and it's more in this quarter particularly, it's gone up to 12% against our normal high single digits. For the year, we expect the R&D cost to continue to increase, but as a percentage of sales, remain in the high single digits for this year. We're not yet given guidance on the coming years. The net R&D spend, net of partner share and capitalization.
Okay. And at a console level, the R&D ex Syngene revenues would be in the 13 to 15% range.
Understood. Thank you.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. My first question is, I think in the opening remark you mentioned some sort of a supply your top line. If you could give more color on that, and if you could quantify what was the impact because of the supply constraint.
Yeah, for biologics, there are actually two components, and Kiran has already alluded to one in particular. So the challenges we faced were partly also due to COVID, as we have discussed, with challenges in critical care segments like oncology based on patient flow. In addition, we faced some operational challenges. We are a fast-growing company, and what we have seen and experienced is some CEOs had limited capacity for overall supply, what impacted us so that we were not able to service the demand, and that was mainly affecting the most of the world markets. So internally, we are also further sorting out our operations as a learning and fast-growing company. These are not major topics. While it has impacted us, we will be back on track to our full operations in the coming quarters.
I'm not sure I understand that. When you say limited capacity to meet a higher demand, given our expansion in PEG, and available capacity for trastuzumab, which I'm assuming are the two largest products, and insulin, what do you mean by, if you could just give a little more, just to understand it better, and what gives us the confidence that, this will get resolved in the coming quarter?
So let me try and answer that. What we are saying is that the supply demand that we need to cater to, I think one of the big challenges we have is that there are a lot of logistics disruptions at this time. And very often when we find it difficult to basically get it off, to ship it off in time. So that is the kind of issues we are trying to tackle at this point in time. It is not to do with the inventory, it is not to do with the demand, but it is to do with a lot of logistics kind of operational issues. So that is what we are trying to fix at this point in time.
Understood. And Chini, could you quantify what in your assessment would be the impact because of this, and by when do we expect this to normalize?
I was reflecting on a question. To quantify it is difficult, but we see a pickup from Q3 onwards.
Understood. My second question is, while I understand that, COVID has impacted patient flow into hospitals, if I were to look at data for, some of our competitor products in both, PEG and trastuzumab, they seem to be showing a positive momentum in terms of market share. While we've seen it, in Fulphila and Ogivri, is there any reason or, just wanted some color on what's making the ramp up slower, despite having additional capacity, despite our competitors still seeing greater market share?
Yes, as you noticed, we have picked up market shares in both Trastuzumab and PEG in the US. It is when we talk about lower footfalls, it's largely the whole MOW markets, the India business.
Okay.
It's not particularly targeted at the US.
Okay. And any reason why our market share ramp up in US has been gradual, or to rephrase the question, how is it tracking versus our expectation, after the additional capacity approval?
It's picked up. The last one that has just come out, October 9th weekly data, shows that PEG is on the overall market is 8%, and of the PFS it's close to 18%, 17.5%. Of course, you can't rely just on 1 week's data, but definitely on an upward trend.
Understood. Thank you.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you for taking my question. Just a data point in the opening remarks on the EBITDA margins for Biocon Biologics, if you could give us the numbers again, last year, maybe Q1 and Q2.
So Biocon Biologics, we had an EBITDA margin of 27% versus 30% last year, and PBT of 81 crores versus 107 crores last year. And as explained, the reduction was primarily on the account of operational challenges that led to the lower sales, forex losses, and higher R&D costs, while we are investing in our strong pipeline.
Yeah, Dr. Krishnan, thank you for that. What is Q1 number? I'm curious about that.
Q1 was 28%, Shyam. It's dropped to 27%. In this 27%, as we already indicated that we have had higher R&D costs, that's taken off 5%. Last year, Q2 was at 7% net R&D spend. This year it's at 12%.
Right.
And then we had that 2% impact of FX, the 13 crore loss versus 5 crores profit in Q2 last year. That together comes to 3%. This year it's hit us by 2%.
Yeah. Thank you for that, Chini. Just trying to understand from a profit share with our partner. I know this could be volatile across quarters, but have you seen anything shared during the first half, or it's an ongoing process, and from an outside analyst perspective, you think we can never find it out?
In terms of the absolute number?
No, in terms of what? If you recollect, in the past we have had EBITDA margins close to 37, which clearly were not normal, right? So we knew that there is some element of profit share coming through. But do you think that will now, as the portfolio becomes larger, will that be more streamlined in terms of what the margin that is being reported?
Yes. See, today it's still it's a bit lumpy. It's not flowing through in a steady state but moment inventory levels at our end, inventory levels at partners' end, and inventory levels at the market with the wholesalers steady, then you'll see this thing play out in a steady manner. Of course, new launches, etc., will keep moving things up and down. But it will start to normalize at a higher level than where we are today.
Got it. Thank you. My second question is on the novel biologics. I thought we would start booking some revenues starting 2Q, maybe itolizumab, maybe some of the other portfolio. Just curious on, we have seen like zero revenue. So is it subsequent now? Is it going to be coming in the upcoming quarters?
So, Shyam, the revenues for itolizumab in India is booked under Biocon Biologics since it's commercialized by Biocon Biologics.
Sure.
The exports for itolizumab has not started. We expect to start exports in this fiscal year. Obviously, it's subject to registration in the emerging markets. So once those revenues start, we will see revenues under novel biologics.
Got it. Thank you. And my last question is on the generics piece. Siddharth, maybe just in terms of the trends that you're seeing, what is the formulation absolute number as well? I used to remember 100 crore quarterly run rate. What is that formulation number in the generics piece? That's one. And two, in terms of general API, anything that you've been picking up? Because our number, if I back out like a 100 crore number, I'm just assuming, has been flat. So are we seeing any pickup in APIs, especially our immunosuppressant portfolio?
Yeah. So the generic formulations number is roughly 120 crores. And we've had a growth in our API business as well, mainly on account of immunosuppressant and specialty API, which is primarily fidaxomicin. So in terms of trend, obviously the growth is now dependent on new launches in the US because our current capacities on APIs maxed out, and we await the commissioning of the new greenfield site in Vizag, which would happen in 22, and the commercialization would start sometime in 23. Till then, we'll only get few incremental capacities and new launches for APIs. But the biggest growth driver would be the formulations in the US, and we have a couple of launches over the next 12 months in the US.
Got it. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you very much, and good morning to everyone. Is there any update on bevacizumab, regulatory pipeline? That's the regulatory update. I understand that I think that target action date was somewhere in December, if I'm not wrong.
Yeah, so we remain confident about the target action date, and we will continue to give you update as we get more information.
A little bit more specifically, has FDA been able to come down to audit the manufacturing for that? And is the COVID-related, travel restrictions going to impact our approval timelines?
Yeah, so we are in discussions with the agency, and it could have an impact at this point in time. We continue to remain confident about the previous communication.
Okay, excellent. And second question is on U.S. glargine. When you say it's a $2.1 billion or thereabouts target market, is this indexed to your pricing, or at what pricing is this indexed to?
Peter, do you want to take that question?
Thank you. Yeah, okay. This is indexed at the prices that are available, the net prices we know from in the U.S. from the reports that are issued by the relative companies.
There are only two companies. One is Innovator, and the other is the Basaglar. So what are you saying?
That is correct. It's basically the reports that you can read from, in this case, Sanofi.
Okay, understood. So it's on Innovator pricing basis, right? That's what you're trying to say.
It's an Innovator net pricing update based on their annual reports.
Okay, excellent. Thank you. Very helpful.
Thank you.
And the third question is on itolizumab. Just if you can give us some timelines for COVID-related trials that a partner is going to do. What would be the sort of patient size, and when do you expect what are key milestones, and also why are we doing phase 4 in India? I assume this is for COVID and not 2 and 3.
No, first and foremost, let me first answer your last question. As you know, itolizumab is an approved product in India. So in India, it is a repurposed approved drug. This has already gone through phase 1, 2 and 3 for approval for psoriasis. So from that point of view, what we have done is a proof of concept study for another indication on which we have got emergency use approval for COVID. The regulator has asked us to do a phase 4 study because of this accelerated approval that they've given us for a short study to basically capture the safety and efficacy data over on 300 patients. So this is what is required in terms of the regulatory requirement. There is no regulatory requirement to do a phase 1, 2 and 3 for COVID the way you are suggesting. The US, on the other hand, does not have an approved drug in the US. This is under trials right now. They are actually doing phase 1B studies in GVHD and in lupus nephritis and in acute asthma. So I think from that point of view, they are required to then do a phase 3 study. In fact, they have been given a very unique opportunity to jump into a phase 3 study, which is under the present circumstances, it is actually a very good opportunity for Equillium to do a phase 3 study and get approval for this drug. So I think that is what augurs well for Equillium. And they have actually had a very good pre-IND meeting with US FDA. They have submitted their IND and they expect to commence the trial fairly soon. And it all depends on the recruitment of the patients, which will then determine how quickly they can complete the studies.
Yeah, thanks for this, Kiran. Not trying to compare US and the India studies. They were two separate questions. But just coming back to India study, so once approved, would it be only for emergency use, or could you then sell it on a broader basis to everyone?
No, right now, please, Sameer, please understand that we are already selling it for psoriasis. It's an approved drug for psoriasis.
No, Kiran, the question is for COVID indication. The question is not for psoriasis.
COVID, basically, you are allowed to sell it to anyone. I mean, basically, with consent, you can actually sell it to any patient. And we have sold, we have already, initially we were because of the capacity constraints, we've already marketed this product or sold this product to over 2,000 patients in the country.
Yeah, got it. One final question from my side. Is it possible for you to break your developed market biosimilar revenues by US and non-US? Some qualitative color is fine.
As a split we are giving as a split between developed market and emerging markets, and that's currently at 50-50. The U.S. market is certainly also, when it comes to our $1 billion revenue target, the biggest component. And the split between developed and emerging markets will move from 50-50 more towards the developed markets, the more the molecules in those markets are getting traction.
All right. Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. I'm just starting with a couple of bookkeeping questions. Like, what is the forex loss that you mentioned? If you please can quantify that. And also about the R&D spend, particularly for the Biocon biologic, what you have mentioned in the current quarter and the corresponding previous quarter, if you can also mention for the first quarter.
Surya, hi, Chini here.
Yeah.
I'll take the questions around biosimilars first, and then they will give you the overall company numbers. For the quarter, we booked a 13 crore FX loss. That's reflected in that in our segment margins of 27%. From our R&D, it's 12% for the quarter. Last quarter, it was at 9%. And last year, that's sequential. Q1, it was 9%. And last year, it was 7%.
Okay. And this forex loss is just on Biocon biologic front, or it is on the consolidated number front? Is there any separate number, or how is it?
I think it was there in Kiran's opening remark that for the quarter there was 18 crores of loss at a group level. So 13 crores for Biocon biologics, there was 13 crores for Biocon generics, and there was a gain in Syngene which offset some of these losses. So the net at a group was 18 crores loss.
Sure, sir. Thank you, sir. I missed that. Sorry for that. And on the biologic progress front, see, in fact, could you give some idea about the contracting cycle for biosimilars in the US? What is the timeline? Why? Because see, I'm trying to ask this question because I think during last December or so, for pegfilgrastim we contracted for or we tied for this 340B program and all that, but the contracting cycle was supposed to, or generally is somewhere June, July, like that. So obviously the benefit of that contracting would not, means the tie-up would not have really helped us so far on the pegfilgrastim front. So same would be the case for other biosimilar also, the recent launches, trastuzumab and all that. So if you can give some idea about the contracting cycle and how can that progressively benefit us?
Paul, do you want to take that question, or Peter?
Sure, I can. This is Paul Thomas. I can comment. So I think, Surya, thanks for the question. I think it is product by product. It will make a difference. And I would say it's a customer by customer process. I think pegfilgrastim and trastuzumab, the oncology products, operate in a different space than Glargine on the pharmacy benefit PBM driven side. So those are two different animals. And so as you talk about pegfilgrastim, where that kind of contracting is more on a customer by customer basis and less on an annual formulary cycle. Whereas I think you would say the pharmacy benefit side, where Glargine operates more on an annual cycle and has complexities related to that, which have been referred to.
Okay, understood. At least for 340B program for pegfilgrastim. So if you can give some idea, when should we start getting the benefit of this tie-up? Sure.
I guess I wouldn't tie that to a
a specific July cycle or something like that, and rather it's a process that will play out with customers over time. Okay. My next question would be on the so if you can provide some sense about the key capex projects. Say like that, we know that this immunosuppressant project is on the generic side, that is likely to be commissioning soon. Then the greenfield API plant that is there to be commissioned next year. We have also talked about the third monoclonal antibody biologic plant separately, and also something on the Biocon biologic side. So if you can, the key projects that is there to be either commissioned or in the process of construction, if you can give some sense, that would be useful.
So let me start with the generics capex. So we said that the greenfield plant in Vizag, the phase 1 of that plant is already commissioned, which was a much smaller unit, but we have a much larger immunosuppressants facility under construction that will be commissioned physically by calendar 22, and then the work on regulatory approvals will commence after that. For this plant, we are investing almost 600 crores. The second is we have a peptide facility, peptide API facility on which is going to start commissioning in Bangalore. This will take almost 2 years to commission. Then we have a large synthetic block coming up in Hyderabad, which again the construction will start early next calendar year. And then we have a couple of other facilities, including expansion of our R&D infrastructure and quality infrastructure in Bangalore, which again the work will all start in the coming year. Apart from this, one capex that we are looking at is on our injectable facility, which work again is in the final stages of determining the location and the sizing and the specifications for the plant, and work would start in calendar 21.
Okay. These are all cumulatively, the capex would be something like what is cumulative capex for the generics?
Would be around 2,000 crores over the next 3 years.
Okay, and separately for the Biocon biologics, as you have mentioned, I think already.
Yeah, Surya, I'll give you a color. So far, the gross fixed assets is about $450 million, and our net block will be closer to $200 million.
Okay.
As we scale up, I mean, for $1 billion and beyond, we are investing quite heavily into capex, as we already covered in the opening statements. We have a large monoclonal antibody facility coming on stream, which will go commercial in FY23. The second plant is expected to go commercial in FY24. We have expected to trigger an investment of expansion of our insulins capacities, and altogether, we would look to take the asset block to just above $1 billion. And that would be the total thing. Now, of that, net of partner spends and spends that have already been made, because we've already invested $200 million towards the new upcoming projects. We look at it net, we're looking at about $400 million of cash flows over the next 4 years, starting FY21 to FY24.
Okay. And just last one question on the insulin aspart front. Is there any goal date that is available with us, ma'am?
The application is under review with both the US FDA and EMA, and once we get further information, we'll share them with you. We remain confident about the successful review and approval.
Sure. Okay. Yeah, thank you. Thanks for this.
Thank you. The next question is from the line of Vinayak Mota from Augmenta Research. Please go ahead.
Yes, good morning, everyone. I just had a question, more of towards the financial end, since you are looking to have some heavy capex going for the next 2 to 3 years in expanding your capacities, and currently also as I can see that you have taken a new borrowings to the tune of 700 crores. So out here, how are you looking to use the funds? Are you going to be more leveraged, or is it going to be a mix of accruals and leverage, or totally accruals? If you could just throw some light about what is your comfortability level with the borrowings out here. Thank you.
So at a group level, our net debt is 1,000 crores. And all the capex will be funded through a combination of internal accruals. I mean, as both our businesses, biosimilars and generics, are obviously going to generate cash this year and going forward. We will also take on more debt, but the most important source would be the private equity fundraise that is currently in works in Biocon Biologics, and eventually an IPO for Biocon Biologics.
Okay, great. Thank you.
Thank you. The next question is from the line of Raja Mohan V, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. My first question is on Semglee. Though you did mention about the difficulty to mention pricing strategy on Semglee, with the original pricing discount feeling alarming, wanted to understand, are the discounts at the net level in line with other biologics like Fulphila and Ogivri? Also, if you could, by when do you anticipate double-digit kind of market share based on your initial assessment?
So again, when it comes to pricing of Semglee in the US, we don't give details. The whole business model of Biocon Biologics is built on global scale, high quality, and cost competitiveness. And we are able to either walk price, volume, or value maximization. So with Semglee, we will be in a position to be very, very competitive.
Okay, and to the second part of my question.
To answer your question, Raja Mohan, I think what you should understand is that obviously these are two segments, okay? The insulin segment is very different to the other biologic segment, the biosimilar antibody segment. So these are slightly different segments. So obviously, they have very different discounting kind of norms for each segment. So I don't think you can compare one with the other.
Understand. To the second part of my question, by when do you anticipate, if you could tell us, by when do you anticipate double-digit kind of market shares based on your initial assessment of the market in Semglee?
I think we are quite confident that it will happen in the coming future, because I think Mylan is very confident that it will garner good market share, by the end of this fiscal and beyond. So that's and obviously the aim is to garner maximum market share. So when will we get the 10% market share is a question of many factors. Whether there is any impediments caused by the market dynamics right now in terms of COVID. Is it going to be easy for us to garner market share because of COVID? These are questions and answers that Mylan is trying to address, and then I'm sure you will see the performance of Semglee in the next 2 quarters.
Okay, fine. Next, coming to Ogivri, though you have indicated to 6% market share in the trastuzumab market from 5% last quarter, Mylan in a recent presentation has indicated to gaining 3 to 4% market share in the months of August and September of 2020. Specifically, they mentioned this. So are you now closer to the double-digit market share in Ogivri? And is this trend accentuating? Could you mention similar latest weekly market share data as you did for Fulphila?
So actually, if you look at the two presentations of Ogivri, you can see that in the 420 mg presentation, we are at 10% market share. and the last week's market share performance overall is 7.8%. So you can see we've already made some tractions over the previously reported 6% to 7.8%. So there is a good traction and uptick of trastuzumab, and as I said in one of the presentations, which is the dominant presentation, we are already at 10%.
I understand. That's quite helpful. And finally, Kiran, this question comes back to the subject of biologics listing. Wanted to understand as a shareholder, is there also a thought process within to have a preferential offer at issue price for existing Biocon shareholders so that it becomes mutually beneficial? The existing shareholders get fixed shares without being diluted by oversubscription, and the company also doesn't dilute its receipts in the process.
So all we can say is that we will definitely be very sensitive to all these comments that our shareholders of Biocon are making, and we will try and see how fair and equitable we can be to Biocon's shareholders when the time comes.
Okay, thank you so much, Kiran, and best wishes.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital Advisors. Please go ahead.
Hi, good morning. Thanks for taking my question. My first question is on your insulin aspart filing in the US. Are we seeking interchangeability designation for this filing at this point?
Yes, we are seeking interchangeability, and we remain confident. Yeah.
Okay. And is there any timelines that you could share on your RH insulin filing plan?
The development is progressing very well, and as we get closer and we get firmer dates, we'll be happy to share them with you as appropriate.
Okay. My next question is on the capacity front. If I heard you right, the new MAP facility in Bangalore is going to start commercial production from FY23. And so from the perspective of our $1 billion sales guidance for Biocon Biologics in FY22, do we have sufficient capacities from our existing units at Bangalore and Malaysia?
Yes, we believe we largely have the capacities. Some networking strategies to fill small gaps here and there, but yes, and broadly, the answer is yes.
And last one on itolizumab. I believe there was a comment that the drug has been administered to 2,000 patients in the COVID indication. So is that a major contributor to our Biocon Biologics revenues for the quarter?
No. As you know, we are. This is not a major contributor. I think the 2,000 patients is being offered at a very affordable price point. So you can understand that this cannot be such a major contributor. Even if you just look at the price of the product, you can calculate for yourself that this cannot be a major contributor. But it will be a major contributor going forward once we get the US, in a successful place.
Thank you, ma'am. And that's all from my side.
Thank you. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking my question. Christian, as the biosimilar market is now beginning to open up with more sort of follow-on approvals coming through across different products, I just wanted to sense, what's your sense in terms of how important is the first mover advantage in your assessment in these products? Or given the nature of these products, that's not going to be a very relevant force from a market share perspective, sort of structuring perspective in the coming quarters? I mean, as we go forward with it.
Yeah, very good question. I would say that first mover advantage is very important, but at the same time, depending on the presence of companies like ours who are already in the market where we have had a so-called first mover advantage, it obviously helps with the products that we are bringing to the market. And what we have seen is that certainly companies like Mylan and Biocon are very competitive in the marketplace, so that also helps a lot. But as far as the first mover advantage is concerned, you can see that it has helped many companies, with market share. And, we've had a unfortunate pipping to the post, as they call it, with trastuzumab, because we had the first approval, but unfortunately we had Amgen basically launching at risk, and they had the first mover advantage as a result of that, which got them a lot of market share. But I think we are now in a position to basically slowly, catch up in whatever way we can.
Okay, thanks. That's helpful. And secondly, on the emerging market biologics business, have you seen any different dynamics in terms of versus the regulated markets? Is it easy to scale up products in these markets versus what your US and Europe have sort of experienced over the last few years of the initial biologic experience?
Singh, do you want to take that question?
Sure. Thank you, Christiana. So as you know, our past performance, we've really witnessed sustained business in line with our strategy, and we've had accelerating success adding on new launches. Specifically, we refer to the new launch in trastuzumab in Argentina, and we expect to grow and launch many more products over the coming quarter and quarters. So the rest of the world market is an extremely important part of our growth. Our vision is for affordable care will allow us to grow the market size in these high volume markets. Biosimilars have gained excellent traction in these regions, and our base in emerging markets for trastuzumab, insulin, and glargine continues to be an important contributor for our business. In addition, we are present in most of the top 20 rest of the world or MOW markets. Geographic expansion, introduction of new products, and increased volumes in products already being marketed should really help with the continued growth in this very important pillar of growth for Biocon Biologics. As you know, we have gained additional approvals across Latin America, AFMET and CIS, and we expect to drive further growth in the coming quarters. In addition to our historically strong regions in Brazil, North Africa, and Southeast Asia. And as you may remember, Cristiano referred to, we have opened up in commercial offices in key strategic markets such as Brazil, Malaysia, UAE, and Saudi Arabia, and we do plan to expand further. So thank you for your question. I hope that addresses it.
Thanks. That's helpful. Secondly, if you can just add on to that, in the developed markets, is there a way, is bulk of the business which comes from biologics tender driven, or is it essentially a lot of distribution or B2B, B2C driven business?
So it's rather. Sorry, go ahead.
Thank you, Kiran. So it's actually a mix. So we have a lot of tender business, but what we're also actively doing is we're also addressing the non-tender or retail business because it's very consistent, and also there's differentials in pricing opportunities. So we are addressing both tender and non-tender, but the tender business is a significant part of our business, and we're having more and more success in that area. Kiran, perhaps you wanted to comment further.
No, that's exactly what I wanted to say, that yes, there is a large element of a tender business, but there is also a non-tender business which is obviously at a higher price point. So we as a company want to address both opportunities.
Thanks and best of luck.
Thank you. The next question is from the line of Pankit Bhupesha from Stock Access. Please go ahead.
Hello. Am I audible?
Yeah.
Yes, sir, you are.
Yeah. Good morning, everyone. So my question is that in past that we have seen, whenever there is a new launch in biosimilar space, we have seen a good ramp up in the initial month itself. But the similar stuff we haven't seen with Semglee. So I think what went wrong, or how should this be looked at?
So when it comes to Semglee is very, very early in the U.S. market. And Semglee has limited competition. So the next quarters are important, and we have already expressed that we are confident that Semglee will gain traction in the United States. There is a high need for low-cost insulins and insulin analogs. Semglee, the numbers will emerge over time, over the weeks and months to come. And in the next 2 quarters, as also Kiran has already mentioned, we expect to see the market penetration ramping up.
Okay, sure.
Nothing that went wrong in the market in terms of any operations or strategic approaches.
Right. So one more thing, I know that you can't disclose more on competition, but wanted to understand that how has been the reaction of the other 2 players, and have they been aggressive on pricing front? So any color would be helpful.
So when you look at the biosimilar market, it's not only about pricing. Pricing is one element to enter the market. There are many other operational tactics that are important. The biosimilar market is a market where we see some segments with steeper price decreases, but overall the pricing decrease discipline is much higher than in the generic segment. And so far we are well positioned to compete on price. As I mentioned before, price volume or value maximization, both is possible.
Right. Yeah, I know that we are very competitive on pricing front, but I wanted a color on the competition, that how has their reaction been, and whether they have also slashed their prices. Is there anything, some sort of?
I think, when you have less competition, you are not likely to see a sort of a price destroying kind of tactic at the moment. But when you get more and more players coming into biosimilars, price is going to be important. So right now we are not seeing aggressive responses to our entry in the market. But as you know, if you look at what happened to us in, say, trastuzumab, I think the aggression comes from, launching at risk and those kind of methodologies. But certainly, yes, we have seen, sort of a price aggression, an aggressive price response in many markets in Europe, for instance.
Okay. Thank you. And I just wanted some color on margins. So is it fair to assume that margins on biosimilar will remain impacted, at least for this fiscal? So as we are doing the initial supply, where the margins would be lower as compared to when the secondary sale happens and the second leg comes in?
We see margins trending upwards. Like I said, the moment it normalizes between inventory at our end, at the partner's end, and with the wholesalers, the profit share or the overall business profitability will probably get distributed. Right now, there's a bit lumpy here and there.
Okay. And the last question that I wanted to understand that how important is interchangeability status for our 1 billion revenue target?
So when it comes to interchangeability and the $1 billion US dollar target, we have to look at the different therapeutic segments. Interchangeability in oncology will not play a major role. When it comes to the insulins, what we are seeing that interchangeability is being discussed, and we are discussing as Mylan with the FDA. It is not a major success factor. What is happening in the market? We see that at a pharmacy benefit manager level, that products are being switched from one product to another without interchangeability. It is a factor good to have, but it's not a critical success factor for success and market penetration.
So is it safe to assume that we are confident of 1 billion even without the interchangeability in Semglee?
As it is not a critical success factor, the answer is yes.
Okay. Thank you. That's all. All the best.
Thank you. The next question is from the line of Ankush Agarwal from Stallion Asset. Please go ahead.
Yeah, hi. Thank you everyone for taking my questions. My question is regarding the margins on the overall business. We have been talking that biosimilar business as a whole has been more profitable compared to other business segments of generics or say research services. But till now, the margins have been quite volatile for the biosimilar business. That I understood would be because of the lower scale of business compared to what kind of opportunities we are chasing. But given that over the next 1-2 years we are chasing a target of $1 billion, so do you think that at that scale there would be some kind of stable scale margins that you're looking at, or at that scale also it would be a little difficult for us to achieve a stable scale margins?
So, like I said, right now the margins are impacted because we have lower sales than what we planned for. That's really the one that's the biggest play. And then as a result, R&D costs are looking higher as a percentage of revenues. And then there's that impact of FX losses. As we scale up on our business, we will expect to see improved margins. And as business stabilizes, it will also remain steady and won't be as lumpy as we've seen in the last few quarters.
Okay, so just understanding would be at 1 billion kind of sales, you expect the biosimilar business to have a stable scale margin, because one comment that you recently made is you expect normalization when the business as a whole has inventory level normalized at the Mylan level, at the market level, at your level. So at 1 billion kind of business scale, do you expect that thing to happen?
That's right, yes. Because 1 billion is for the FY22 is the FY22 guidance. I just want to caution that look at margins pre-R&D. We have not yet given guidance around the R&D spends.
Okay. All right. Thank you. That would be all.
Thank you. The next question is from the line of Nithya Balasubramaniam from Bernstein Research. Please go ahead.
Hi, just had a quick one on Copaxone. So any color you can give us on when do you expect to file back? What could be review timelines?
Expect to file back in the next few months. Since it's a major CRL, we expect the FDA to take anywhere between 8 months to a year to review. But we expect to respond back within this fiscal.
As in the next quarter, right? You would be able to...
Yeah.
Oh. Thank you for that.
Thank you. The next question is from the line of Charul Gupta from Dalal & Broacha. Please go ahead.
Yeah, hi. My question pertains to for Aspart, have you got a target date?
The review, as I mentioned earlier, we're confident and we will share the target date at an appropriate time, later time.
Okay. Yeah. Then, secondly, in terms of the capex over the next 2 years, could you give me the segment-wise breakup in terms of biologics, how much generics and Syngene?
I think we have said in the past, give or take $100 million per year per segment is what you should consider.
Okay. Yeah. And last question on Remdesivir. Are we looking at exports to the last market?
Yes. We will look at all opportunities.
Okay, but the current agreement is only for LMIC, right?
Yeah, that's what I mean. So LMIC are all over 100 countries. So I think that's a large market to look at.
Okay. Yeah. So US doesn't look likely.
Oh, we don't have.
No, we don't have. I mean, Gilead has given the license based on a certain number of countries, and of course it excludes US, Europe, and many other of the
LATAM.
And LATAM as well. Yes.
Right. Okay. Thanks. All the best.
Thank you. The next question is from the line of Rijesh Kasera from Mirae Asset. Please go ahead.
Yeah. Hi. Good morning to all. Just a clarification.
See, on the drop quarter-on-quarter on the biosimilar sales, you did mention much of it was because of external issues, be it COVID-related or logistical issues. But I just had a quarter, if I see Q1 versus Q2 across the globe, there has been a substantial opening up of economies, and month-on-month across businesses we are seeing normalization happening. So it is kind of difficult to understand why in Q1 we reported a better quarter with 690 odd crores, and this quarter there has been a drop because of these external issues that you alluded to. So if you could just help me understand what exactly was it, some internal issues as well that we faced which led to a drop?
So I mentioned earlier that it was basically a operational logistics issue which prevented us from getting product out of our from out of Biocon. So I think there was a demand, but we were not able to cater to that demand. So I think that is what we are fixing now, and we have fixed it, and we hope it will reflect in the coming quarter.
So it was nothing related to any like earlier last year or when we faced with pegfilgrastim of capacity constraint. Now we don't have those kind of constraints. Probably some technical issues in getting the product manufactured delayed the decision.
It wasn't the manufacturing, but let Shreyas explain.
So hi, this is Shreyas here. So let me just quickly explain that topic. I think if you just look at what we've done in Q1, we voluntarily ramped down certain aspects of our activities, which given the long biologics manufacturing cycle, some of it flowed through into quarter 2. And as we look to ramp up our output into Q2, we have seen restrictions, particularly in personal travel, which has affected us from ramping up our operations in, this particular quarter. So you're seeing us build the inventory, you're seeing us having the product, but not necessarily having that product leave our site in this particular quarter. So you'll see that settle down and see more improvements in the coming quarters.
So, if I have to just, take this forward, so can we see some, lost sales that we had this quarter coming back to us, say next quarter or quarter going forward?
Yes, your understanding is right.
And we are not quantifying that.
It's basically a timing issue, and it's a lag issue. So I think if you look at that, then I think you will make up in the coming quarters. It is not a loss of sales in that sense. You haven't lost business.
Sure. Just second question on the market dynamic. There's a lot of change in regulation in the developed markets regarding clinical trials and because by companies which are expected to see development timelines for a lot of players that would come in.
Hello. Sir, request you to move to a better reception area, please. Your voice is breaking up.
No?
No, sir, it's still breaking up.
Is it better?
Yes.
Sorry. Yeah. So, just a clarification regarding the regulatory landscape. Just, of late we have been witnessing that a lot of these developed markets, specifically US and Europe, are trying to reduce the clinical requirements and the development timelines required for developing a biosimilar. So, basically the newer entrants would, kind of spend less on the biosimilar development compared to what we have done. So how do you, going forward, say 2-3 years down the line, see this landscape changing in terms of competition and incremental competition coming through in biosimilars, because the return requirement for these companies would be much lower. So, how do you think that would impact our business per se in these markets where the products we have already launched?
So that's an excellent question. Let me answer it by saying that this is how any new segment will open up. If you remember when generics started, this was the same kind of challenge that the early movers had, the early companies had. They obviously were at a disadvantage when it came to these kind of abbreviated pathways, but they opened the path. So we have done that, and now I think we will also benefit from the abbreviated pathways, because obviously developing a biosimilar